Welcome all to our live reading session, which we are focusing now on is AGI Greenpac annual report. Let's get back towards operational risk. Availability of raw material, which is one of the risk. Impact is the inability to secure a constant supply of raw materials at a fair price may have a detrimental influence on operations. Mitigation measures to avoid being reliant on a small number of merchants, we have established ties with a variety of sources. We have tried many vendor engagement tactics and have also maintained a planned inventory. Second one is cost control. Profitability might decline if cost cannot be managed. We use a variety of cost cutting strategies to get more control over production cost. Throughout the year under review, we used alternate materials, different fuels, and automation to cut cost. Operational limitations. Production might be hampered if operations are continuously disrupted. We were able to mitigate this operational risk by continually reducing operating bottlenecks and improving automation across several units. Quality related concerns. Lowering or altering product quality might hurt revenue and cause customer turnover. We conduct several rounds of quality testing at various stages of the value creation process to ensure a low rejection rate and high product quality. The next one is health and safety risk. Any sort of mishap or loss of life can put an end to activities. Workers in our factories receive EHS training to ensure their safety and strict adherence to employee health and safety regulations. Loss of key managerial personnel. Any loss of KMP could have an adverse effect on the company. Our rewards, recognition, and pay system guarantees that key members of our management team are competitively compensated, keeping them motivated. Loss of suppliers. Any loss of suppliers could disrupt the company's typical business environment. All of our suppliers have strong, long term relationships with us, and our vendors help us maintain these alliances. In addition, we maintain contact with a variety of vendors to avoid leaning too much on any one of them. Product failure and lack of differentiations. If we are unable to evoke a positive market reaction for our items, we may lose money. We offer a diverse range of products to industries. Due to the breadth of our product offerings, the failure of a single item or line may have little impact on overall sales. We have a consumer oriented R&D facility that is always developing new relevant products. Strategic risk, geopolitical risk. Geopolitical concerns may affect how effectively corporations perform. We are able to prevent being overly reliant on any single product or market due to our broad product offerings across industries and market penetration. Economic unpredictability. A sluggish Indian economy could lead to a decrease in demand of our products. The Indian economy has been one of the best performing ones among the developing economies and is expected to continue this growth over the foreseeable future. Inability to understand customer preferences. Our profit potential may suffer if we are unable to stay relevant and satisfy clients through design and product innovation. To fulfill a diverse spectrum of customer needs, we are constantly expanding our product offerings by launching new product ranges and SKU categories in response to regular feedback from our institutional customers. We also conduct R&D which helps with the continuous release of new products. Customer concentration. Excessive reliance on a limited number of clients might reduce profitability. We engage with a wide range of clients. However, due to the complexity of our product offering and our client centric mindset, we value long term relationships with our institutional clients. Inability to adhere to the regulatory requirements. Any changes to the legislation may have an influence on our actions. As part of our dedication to remaining people centric and accountable, we follow all applicable regulatory norms, ranging from those pertaining to our employees' well being to those concerning environmental preservation. Tariff wars and growing protectionism. Any disruption in trade agreements between exporting partner countries may severely affect our operations. To reduce the danger of tariff issues, we have formed amicable ties with our export partners and diversified our export portfolio. So, for us, I typically believe internal control, internal financial control for now wouldn't uh, wouldn't be that important. Environment, it's good to read, but let's focus towards more about the business of the company. So, for now, I'll skip the ESG overview. Hmm. So, CSR activities, good to have. The leadership. Chairman and Managing Director is Mr. Sandeep Somani. Non-executive, non-independent director is Ms. Sumita Somani. Non-executive, non-independent director is Mr. Girdhari Lal Sultania. Non-executive, non-independent director is Mr. Nand Gopal Khaitan. Experienced people. Independent director Ms. Himalayani Gupta. Independent director Mr. Rakesh Saren. Independent director Mr. Lavesh Bhandari. Mr. Anil Wadhwa, independent director. Great. Let's move towards director's report. Dear members, your directors are pleased to present the 65th annual report and the company's audited financial statements for the financial year ended 31st March 2025. Financial results. The company's financial performance for the year ended 31st March 2025 is summarized below. Standalone consolidated, it's 2024-25 with respect to 2023-24. So the revenue is 2528 crores, whereas this is specifically for standalone, whereas in the last year it was 2417.60 crores. So if we see profit after tax, 312 crores vis-a-vis 251 crores, which is a good growth. Let's read the commentary. Operational review. Your company reported a strong performance during FY 24-25 across its key business divisions. Your company ended the year with standalone revenue from operations of 2528.82 crores over previous year corresponding figure of 2470.60 crore, registering a growth of 4.6%. This resulted in profit before tax of 426.83 crore in FY 24-25 against 339.92 crore in FY 23-24. So it seems there are some issues with the connection system. For today, let's wrap up. But Tomorrow we'll focus on the performance and outlook by the directors